Good evening. Welcome to the ShadowTrader Video Weekly for Sunday, March 10th, 2013. Just a quick recap before we start here officially of calls that I made last week. If you recall, I was saying that Apple would be down further and Google would be a great long. And Apple actually did break down on Monday, closed pretty weakly actually, and still remains weak. You can see that was over the weekend last week. I was saying that Apple probably has more room to the downside. I still think it could work its way down to the 400 area, which I'll be watching. And if you recall, I also said that Google would probably have an up move in the last week on this pattern here, on a break of this trend line here, and you see the stock actually went from like 803 up to the 840 area. I don't know what the next move is for Google, to be honest with you, only because it's very overextended here. Even though if you look on the weekly, it's in clear territory, open space. I'm really not very good with putting price targets on things, but I would say if you're long stock, this is an area to take some off the table. Certainly, I would use a stop probably under Friday's low. Notice that you had bottoming tail hammer here and some open space down below. Could easily come back to retest the 20 MA here, so you may want to stop it under there if you're still long any Google on that call from last week. Beyond that, the sugar trade is finally starting to work out. Notice that there's been a break here to the long side in sugar. This is from some analysis that I was showing you in the video a couple of weeks ago. I believe it was like mid-February. You can go back and you'll see I was talking about sugar. And I'm long sugar from under 18. You can only see that if you get off the continuous contract and go to K3. You can see the lows are, I'm long from somewhere in here, 1778. I believe, which was a great entry, and we had big follow-through day upwards on Thursday, and then higher high on Friday with a little bit of a back off. This is a longer-term idea, so right now I'm going to go with a stop probably underneath the low of this week. So if anybody is doing this sugar idea with me and was long here from the monthly trend line as I was discussing, stop should be pretty close to break even now, and the reason for that is because it just wouldn't make sense to me that we would break out like this, break the downtrend line. I think there's a lot of short covering here. It wouldn't make sense to me if we took back the entire low, or took back the entire week's bullish action. So I'm gonna stop now just underneath here, which is 1791, which puts me basically at break even. I would only make a couple of cents there, and my target is, like I said, is a longer term trade. I'm looking to at least make it up into this area here, into the 20 area, now that I've got a trend line break. And remember, on the monthly, this has been in a bearish pattern for a very long time, starting from highs all the way back in here from October of 2011. Okay, on to the SPX. Let's do some channel analysis. This is going to be interesting here. This is really important for next week's action in the S&P. You can see here the all-time high in the S&P is 1576. We're currently at around 1551. There is chance that we tag this level. However, I do believe that we'll have a pullback in the market before we get up to that level. And the reason being is I'm focusing next week very closely on this channel that I've been talking about for a while. You'll recall that as this line has been moving up, I originally said it was at 1540, then 45, then 50. So now I'm putting the channel target at 1560. So this is important. This is a very, very visual level that I think a lot of traders are looking at. These lines here connect perfectly. Then if you redraw this as a channel, notice that it touches this area perfectly, where I think it's no surprise that once the market rallied to here, it did continue to rise, but notice how it rose. It constantly rode the channel for a good 4 or 5 days, and within there were some playable pullbacks. So I think that that's where the market wants to go, up into the 1560 area next week. I'm going to be watching for that, and I'll show you the Dow as well. If we look at the Dow, Dow is actually outside of the channel. This is actually bearish because generally when price gets outside of the channel, as you can see here in the Dow, let's see if my pencil drawing's not working. When price gets outside of the channel here, as you can see in the Dow, it is generally bearish and unsustainable. It tells you that the move is probably a little bit too steep and basically unsustainable. You can see that clearly if you just look at the trend line action here in the Dow. I mean, this is like a normal trend, and this is just like a parabolic trend, like going up. The Russell looks pretty interesting as well. I haven't, it doesn't need the dollar sign, sorry about that. Russell has made some new highs. The channel is not really in play in Russell because it's much further out, I would say. So it puts the Russell all the way at 960. But again, the steepness is just amazing to me. I mean, it's just too much too soon. So I think that with SPX at the 1560, I think that's probably going to be a great point to initiate some shorts. Those shorts may or may not be short-lived. It might be a top that's going to stay in place for a while, but we shall see. All right. Adding to that analysis is my analysis of the profile, which continues to tell me that there is yet no excess high in this market, and that's really important to note, right? An excess high is the difference between if you have single prints or not, basically. So I'll show you some stuff here. Like, look, this would be here like an excess low right here, and this is an excess low, which happened on Friday. So what you want to see when the auction completes, so this is like you can think of it, this is like one big up auction that's been happening for a while. When it completes and then it starts to go the other way, for lack of better words, you should see this bottom, these tails here on the top, so they'd be kind of added on onto the profile like that. Notice that all these highs are really kind of what they call poor highs. They're not really true poor highs. A truer poor high would be flat if it just looked like this, like right at the top, and there was no excess. But I would say that it's what we call a lack of meaningful excess. So I'm going to be watching very closely next week to see if that area ties in, right, with the 1560 area. If we see that sort of excess on the profile. All right. That being said, let me move this over, and I'll go back to this for one moment. For next week, I think there's still a couple of stocks that look like they might have some more up action. Amazon came to mind. I want to finish on this note here, just that Amazon looks like it has a nice little sort of a cup and handle forming. You see here's kind of the cup, and this is a really short handle. There's definitely defined risk reward, I think, in terms of being long Amazon on a trend line break. Notice that this and this connect perfectly, these first two lines right here, and they connect right to there. And then notice like the high of Friday would set it off and probably bring the stock higher. So it's at 275.44 on Friday. So anything over that line probably is good for a short bullish pop up to the 284 level in Amazon. And Netflix actually looks the same way to me, right? It's actually a similar pattern where it's bullish, holding up well, and if you can just draw the line right here, you probably have a little bit of upside potential move there in Netflix as well. All right, but as I was saying, the focus is definitely on the trend channels. I think that longs getting in at this level are probably, they're going to have it's going to be a short-lived move before some sort of a correction. So I'm going to be watching that 1560 area very closely. I think that at that level there will be a lot of, I think, risk in the market in terms of holding long. The profile has been showing us that short-term traders keep getting themselves longer and longer and longer. You can think of it that way. So eventually they do need to liquidate. We did see a little bit of that on Friday. Right, we had a little bit of a liquidation break on Friday, so you could clearly see it in the S&Ps on the opening action. This is what essentially a liquidation break looks like. I'll put it on the 5 minutes so you can see it more clearly. Right, where it's up in here. I should actually put it on the spider so you see it like this. Yeah, there you see it clearly. This is what a liquidation break looks like off the open, and then you can see they just bought it right back up. This was a very short-lived liquidation break, and I think the reason for that is because the auction is not yet over. But if we were to come to the channel, the selling will be probably of a little bit different tone as we get up to the channel high, because it is a very, very technical resistance. So what I mean by that is that if the auction ends right there, then the selling could be a little bit more sustained, and you could have a break more akin to, say, this break here, where you came down more towards the middle of the channel. At least, we didn't revisit the bottom of the channel, but at least we came, more than halfway. So that's another thing I'm going to be watching for as well. As far as a target, after initiating shorts at that level, I'll be looking to see where the midpoint of the channel is, and thinking that the sell-off of the market would probably be to that level. All right, so that's all I have for this week. On behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, I wish you good trading and good night.